Well, Vunani Property Investment Fund has increased its distribution per share for the first half of the year by 24% to 38 cents per linked unit. The company saw revenue increase by 54% to 106.9 million rand. Rob Kane, who's the CEO of Vunani Property Investment Fund, joins us now for more detail on these numbers. Thanks so much, Rob, for joining us this morning.
Morning,
well,
Alicia.
Those the headline numbers. Take us through very briefly the first half of the year and the period that was for the company.
Sure. Alicia, we've had a good year. I think we built over the years quite a stable platform. The fund started in 2006, and in our pre-listing statement we said to people that our compounded growth year on year since inception, which was 2006, to our listing date, which was the end of 2011, was 34.3%. If one annualizes these figures we've received since listing, we've offered investors 36%. So we're pretty much on target as to what we've achieved historically.
Looking at the operation that you do, you're pretty much at the upper end of the market, mainly office. I mean, what are you doing differently? It's not as if there's no competition out there.
Sure. David, I think we are avoiding trophy assets.
What's a trophy asset? I saw it in your statement.
Okay, fine. A trophy asset for us is a beautiful asset and one that anyone would want in their portfolio. However, those are not really always the best buys in our view. Quite often they're over-rented, you're paying very full rentals. And secondly, the price you're paying is at a premium. So it's quite difficult once you've got a fully rented building and you've paid full value to extract further value. What we've done over the years is really trade one level lower than that. Still attractive, good buildings.
Give an example of a trophy asset and something from the level below.
Well, I can't give you a trophy asset because those would be our competitors' buildings. But I think if you drive around Sandton, one can typically see those large corporate headquarters. And we're not averse to buying those, but we just do need to be able to see value in the acquisition.
Of course, that's specifically important where you've got a lower rental strategy in place. So take us through that kind of strategy, because looking at the kind of retention that you've managed to see, you've had 95% success rate there, and one would assume that it's as a result of a lower rental strategy.
I think, Alicia, it's a mix of things. I think you're right. We're probably about 10% under rented. So when our tenants start coming towards the end of their lease and they start investigating, they find they're actually getting a pretty good deal from us. So we don't have a lot of movement. And you're right, our tenant retention at 95% I think is very high. The other thing that I think is important is our vacancies are about 5.8%. And that includes about 3,000 square meters that we acquired and didn't pay for. So if you strip that out, we're at 3.8%.
So very good success that you're reaping there. Just how tough are the lease negotiations becoming with your tenants?
Yeah, they're tough. Tenants are more sophisticated. They've done a lot more homework before they come and talk to us, but they're still staying with us.
Looking at what, when you wake up in the morning, what are the indicators that tell you what's going to happen perhaps 6 months, 9 months, a year down the line? The budget coming up this week, for example. What will you be looking for there, because you've learned that indicator or that statement will affect your business?
Sure. We're very, I suppose, tight in terms of our acquisition profile and what we will take and what we won't take. So we do a lot of nodal analysis to understand what's going on in which areas. One could take Rustenburg as an example. Is that an opportunity, or is that somewhere where one should be offloading property?
Even because of the platinum issues.
Correct.
Long term, maybe there's growth, but at the moment bad.
It's been a tough, tragic time for that area, and one has to take a view, should one be investing there? A few years ago, there were a lot of concerns in the Eastern Cape with the motor industry really cutting back. And one has a look at what the effect is on your portfolio as far as that goes. So I think acquisition criteria is pretty important, and then also your tenants. One needs to look after them, and also just be fussy about which tenants you have in your portfolio.
Just looking at your tenant that sit in your portfolio, the blue chip or government tenants with longer than average lease contracts, so that giving you a little bit of a cushion as well moving forward. It's somewhat of a defensive strategy that you're employing.
Correct, yeah, I think so. And you know, the long lease profile is a bit of a two-edged sword. Once you have a lease in place, it's quite difficult to generate additional revenue out of that particular asset. However, it does give you a really stable platform from which to trade. But our weighted average lease profile is probably about 4.9 years now. It's extended slightly with our recent acquisitions, but we're still able to give that additional distribution. I'm not sure what the sector average is, but it's probably between 3 and 8% for distribution growth.
One of the guys in the sector, Mark Wayner, everyone knows him, and there was quite a stir a year or two ago when he announced their decision to get out of certain municipalities and certain areas where he felt that the issues around service delivery and the costs and so on were just too great, and therefore it wasn't worth whatever returns they were getting. Have you experienced similar issues, and if so, what have you done?
I think the whole market has experienced those issues. And I think it's really something that government does need to address. It really is a concern for us. Some people are viewing government tenanted buildings as higher risk than your normal commercial buildings. However, we have been in that market since 2006, and I guess we've paid our school fees, and it's hard work. But we get our leases signed and our tenants stay in the buildings.
Of course, when it comes to growth moving forward, you've highlighted in your results that you're looking at further acquisitions moving forward. Is this, telling of the kind of environment we're facing right now and just how much of a shortage there is of office space at the moment as a result of the limited building activity that we're seeing in the broader context?
I think, Alicia, that kind of puts us in a very good position going forwards. We don't have a huge amount of vacancies, but the vacancies that we do have and the leases that will be expiring, I think we'll see good rental growth out of those.